person that doesn't know anything about options, it's it's very difficult for them to grasp the concept. And once the light bulb
But it's
goes
easy.
on,
Yeah.
it is fairly easy once they understand. So let's see if the following analogy flies. Okay. So you want to learn and use options in your investing portfolio. Think of it this way. Let's say you want to invest in 3 or 4 companies. Think of that as an orchard, as 3 or 4 trees in your orchard. Each company is a tree. Each company is growing at a different rate. Each company is throwing off income and earnings. And you can think of that as the fruit on the tree. Okay? Some trees produce more fruit than others. Some companies do better than others. If you buy one of those companies, what you can do is you can sell an option for the price of the stock on that company, so that if the company is very successful, the stock price will go up and your option will be exercised. So you get a return for basically selling an option on the future price of the stock of that company. For that you get a premium. That premium is yours right up front. So what you have to do is decide on which company and which options to invest in, or which options to sell, so that over a time period, you're able to basically generate an income from that ownership. Sometimes, for example, a tree in an orchard doesn't have very good fruit, so then its stock price goes down. That'll happen in your portfolio, but you still own the company, and it may take a few months for that company to resolve its issues and the stock price turns around. So you're not losing on that company, you're owning something that has value, and with selling options against that value, you can, on a continuous basis, generate an income stream that you can use as either income or as enhancement to your portfolio. It improves the value of your portfolio. So the key is not to say, well, as soon as the tree had a bad year, all those orchard owners don't go and chop them all down. They don't throw them away. They don't sell all their stocks. You shouldn't sell all your stocks if it had a bad quarter. Okay? You should basically keep owning good companies and sell calls against those companies, so that in the long run you're going to generate a positive result. And most of the time you're able to, let's say, be successful, harvest a very good bountiful fruit from the tree, gain on that particular investment, and you've earned that income, and you now can go look at adding more trees, new companies to your orchard. So you grow your portfolio with new companies. Some may be sold each week, so you look at it this way: you're maybe selling a good tree out of your orchard to somebody that's starting a new orchard, and you get to now pick a new company for your orchard, and you can now grow that company, use it in your portfolio, generate income based on the options you're selling on that particular company. So that's just a simple analogy. There are other analogies